Well, howdy folks, very quick update again today. I'm going to start with the commodities and then go across to stocks, and we'll have a look at the currencies. We're starting to get light on our positions now, so getting out of some of these profitable trades. So we're lightening up a little bit. I think we've only got about 50% of our overall positions left. Let's start with natural gas. Now, we went long again on natural gas at just around the price that we're at now, around $2.89. So our average price is now $3. We long from $3.10. $3 and below that. So we've got three positions. We're still not completely full. I've got a little bit left to add still if we get a little lower. So I'm not going to go into detail on this position. What I will do is I'll link yesterday's video at the end of this one so you can have a look at my ideas on natural gas so we can skip a little bit of time. But all I want to say right now is that we're holding that support pretty well. It's a super important and key support level, and we're trying to hold it. It's looking a little weak, I have to say. If we go across to the daily chart, you can see there are no daily reversals. Yesterday's candle was bearish, the previous candle, and the one before that, and the one before that. So we've had a week's worth of bearish candles, and we still don't have a reversal on the daily, but we are trying, if you look closely at the 4-hour chart, to form a base here. Whether we will or not, I don't know. My idea is that this price will eventually go back to 365, to the top of this channel, these previous all-time highs. If we break and close and hold beneath 277, thereabouts, I'll look to hedge my entire position and then just wait it out to see how things go from there. We got out of our WTI long trade, so we've been long and short on this energy commodity for a long time now, doing pretty well. If we look at the day chart, you can see why we got out of those longs. We came up to underneath the 200 period moving average and this key resistance level, this previous swing low and this gap and so on. And we've just sort of rejected from there for now. So I don't really know which way this is going to go. We could be rallying back into the 90s or moving down into the 60s. I don't really know. But it's really interesting, this whole Middle East saga and what actually really happened, who knew about it, who stands to benefit from it, and who's actually making a fuss about Israel's invasion of Gaza. And I have to say, apart from a few riots and rallies around the world, there are not a lot of awful people in the Arab nations making a fuss about it at all. One has to question the bigger picture around all of this, and when it comes to the price of energy, including oil and gas, one has to sort of, I suppose question one's premises right from the beginning. So we don't have any positions on WTI. Maybe we'll try and sell higher up again, or maybe we'll try buy lower down. We don't have a position on Bitcoin. We're short on London cocoa futures, out of interest if you're trading this sort of thing. Yesterday we had a nice bearish day, we dropped down to support. That's our entry price right there. And this market's about to open up again today in about 20 minutes. So we'll see how that goes. We're looking for a move down to the bottom of the channel, then eventually a channel break and a move lower. The fact that I'm trading this futures contract on this very tiny account makes it incredibly risky, but I'm doing it for demonstration purposes. So the amount of risk that I've taken on this trade compared to the very small $2,000 account size is disproportionately large, but the reason I put it in is so that we can monitor this trade together. Remember, this is a live account. I'm treating it as a demo account, so even though it's real money, I'm using it to demonstrate my overall strategy and illustrate my trade positions, which are similar to the trade positions I have on my larger accounts. The only other one we have on here is sugar. And once again, I'm not going to talk about sugar. We're just going sideways, and we have been doing since really August this year. So it's a very, very long time. We're just drifting sideways. We're looking for this to move down. We may have to retest the green line at the top first. We've just closed our long gold position from 1939, or was it 1937, thereabouts. Struggling to get higher and forming potential double top here. We'll look to buy gold on dips again. We've got several moving averages below us and support lines which look interesting, starting with this 100 period moving average, then the 50, then the 200. And we must remember that a retest of this channel top is not beyond the bounds of possibility. If we look at this on the day chart, you can see we've still got all these moving averages from which we bounced last time, but there's the channel top, and we've got further support down here at about 1890, these previous swing lows, and the 61.8% Fibonacci level. So we're going to keep an eye on this very closely. We're now out of all gold positions. We took a good profit on that. We'll wait to see how that goes. And then URA and UEC, these two down at the bottom here, you can see I've got a small loss on UEC, a bigger, well, double the size gain on URA. I'm looking to close these trades at the market open. That's in about 3 hours' time. Now going across to stocks. We're still short on NASDAQ, S&P, Microsoft, Nvidia. And yesterday we just managed to get our short position on Apple at 191. We're at 191.60 now, so hopefully that'll work out. As I said in the previous video, I have no clue which way these are going to go. There are equally good arguments for the stock markets to rally dramatically up towards the end of the year. And there are also really good arguments for the stock markets to collapse completely and move down towards new lows again. As far as I'm concerned, I don't know. The only thing I do know for sure is that these markets are incredibly overextended. This rally from the recent lows on NASDAQ has been 14.2%. and that's all taken place in the better part of 2 weeks. And on S&P, we got a 10.98% rally, call it 11%, and that also took place in the space of about 2 weeks. But look at Nvidia. Nvidia has rallied 27.4%, and Microsoft has rallied 22.1%. So huge rallies. And what I said earlier is the only thing I do know is that these markets are incredibly overbought and that we should get a pullback down to some of the moving averages and the support levels below us. Let's take the easiest picture here, and that's NASDAQ. We formed this bull flag, which I kept on pointing out, despite the lower lows and lower highs. Actually, it was a bull flag. We broke out through the top of that and through all these moving averages. See how far the 200 period moving average is down below us, where we bounced off recently. But I think we could get a pullback to the channel top where this conglomeration or confluence of moving averages is. And that's around about the round clean 15,000 level, maybe 15,200. So we're looking for this pullback down to about 15,000. It's a short week, so maybe the volumes will be off a little bit and there's more room for the market to thrash around, create a little bit more volatility, and perhaps pull back a little bit more drastically than people expect to happen. That does often happen during periods of low liquidity, low volume, and particularly in holiday period weeks, Thanksgiving being one of the largest ones. And finally, Forex majors. We're not in any currency pairs at the moment. We got out of our long euro trade 2 days ago. We took a profit on that. We got out of our long pound trade. We took some profit on that. We got out of our short US dollar yen trade just above 147. And we're looking for a pullback up to this green line around 149.30. Perhaps even 150 before selling the dollar yen again for an eventual move down into the high 130s and maybe even low 130s, around about 134 to 132. So on the Forex majors, it's now a matter of wait and see. We want to buy euro into dips. We want to buy pound on dips. We want to sell dollar yen into rallies. And you can see the dollar index is now probably a little overstretched as well. So we expect this to pull back. And I expect this to pull back perhaps about 104.50, maybe 105, maybe even slightly higher, up to 105.50. And as the dollar index pulls back, we should get more opportunities to buy euros and pounds and sell the dollar yen. So if and when the dollar index gets up above 104, 104.50, 105, I'll be watching for that to reverse and then looking to rebuy the euro and the pound and resell the dollar yen. So that's it, folks. I hope you enjoyed that. Going back to the commodities, natural gas just getting a little bit of a bid as I've been talking. WTI, the same thing. We're watching to see how London cocoa goes and also hoping for sugar to come in. If you've enjoyed this content, please give the video a thumbs up. And if you're not subscribed, consider subscribing to the channel so that you don't miss future videos. Take care. Have a great trading day.